All right, welcome to this weekend market reviews for the 4th to the 8th of December 2017. Last week ended up as a very volatile week. This very week, since today is a Saturday, I am already referring to it as last week. Okay, all right, it was a volatile week due to news announcements, especially for those news impact, especially for the Brexit comment that was made that affected the majority of the sterling pounds crosses. We saw the hit on those sterling pounds crosses that we were involved in, but right now things seems to be returning to normalcy. Okay. All right, let's move on straight into the Forex Factory economical calendar to see those high impact news events that are scheduled for this upcoming trading week. All right, so next week, let's see. Okay, this is next week here. We have quite a lot happening to wrap up the year. Nothing is happening on a Sunday. Plenty of high impact news events, especially interest rate announcements. Interest rate announcements expected from the Australian dollar axis. That is it. I need to keep, as long-term traders, pay attention to this. What else again? All right, let's scroll down a bit. Interest rate announcement from Canada on Wednesday next week. That's it. Also keep that in mind as a long-term trader. Then we have the non-farm payroll of Friday next week. So these are the most heavyweight of all, but at any rate, all of these news announcements have the capacity to change the direction of the market. They are high impact news events, so we must pay attention to them before they are released. Next week is going to be quite a very busy trading week. As you can see here, so many high impact news events beginning from Monday to Friday. All right, let's move into the charts and see what we have. First, I would like to start with the American dollar against the Canadian dollar. This is the daily time frame. Remember, we were involved in this pair. This is just one of my accounts, okay, a small one. We're involved in this pair. We suffered for so many days. Price was moving and at a loss. Okay, actually, we took the trade somewhere here. Price took us on a loss right to that area. We kept analyzing this pair constantly on a daily basis, and well, there was a chart I actually posted in the Telegram group telling you that this is a move exhaustion. We are likely going to see a breakout pullback reversal move. Okay, if you remember that. So right now price has come back to my entry, and I'm even sitting on a small profit right there. Well, majority of traders would have closed the trade out. Well, I am not going to do that. I still have the technical look that price will be pushing to the downside in the American dollar against the Canadian dollar. So you can see that the momentum push to the downside is really much. It's really much on that news announcement from Canada for price action worth of 1, 2, 3, 4 days in a row being covered by just one daily candle. That is to tell you that the momentum to the downside is much, and so we are likely to see a continuation breaking free from this lower boundary of this range. All right, so as price will be breaking free, we will be looking for possible continuations to look for short entries in the American dollar against the Canadian dollar from next week. So I am still keeping this trade. I don't want to be nervous with it. I don't want to get emotional closing the trade when from my analysis I have seen that price will be coming back down. All right, so just leave it there. The only reason why I will close the trade is if I find any reversal formation in the daily time frame, let's say around this level, then I can close the trade because there will be a potential push to the upside. But for now, everything looks good, and so I am keeping the trade. All right, let's move on to other charts and see what we have. Just give me a minute. Let me fix this up. Just 1 minute. All right, I am back. Sorry about that. Looking into the American dollar against the excuse me, looking into the American dollar against the Japanese yen. This is the 1 hour time frame. As you can see, I took a short trade right there. I was supposed to call for this signal, but I thought leaving it until the market opens for next week. Okay, this is a trade. It is a pair will be going short as soon as the market is going to open. In the 1 hour time frame, although price behavior seems really mixed, even if you're trying to draw a trend line, that is the best trend line you can have. That is the best trend line you can have. As price makes the breakout of that trend line, went for the pullback, that is where I got my entry. All right, I expect price to come back down at least to this area where I'll be taking out my first profit target. So that trade is going to run. Let's see the weekly time frame. Let's go from up down. Weekly time frame, price is obviously bearish. Okay, although last week we got that one candle, that green candle to the upside, I am still very bearish with the American dollar against the Japanese yen, hoping that price is coming to this junction of the chart, that rising trend line here. That is where we are shooting to. So I've gotten my entry here. I'll be calling for this signal as the market will open for next week. In the daily time frame, we saw a little bit of rejection of this area, which has become my first profit target. Price is likely to form a range. Around this area is where that resistance level is, as we previously analyzed. So this is my stop loss, one and only final stop loss level, no shifting. If it wants to be hit, I let it hit. I am risking only 2% of my account. My first profit target will be somewhere in here. That's my first profit target. So the risk reward ratio from the stop loss to the entry, from the entry to the first profit target looks good. All right, it's like 1:1. Once your first profit target can offset your risk from the stop loss to the entry, then it's a good trade. So let's keep that. once the market is opened, I will be sending this out as an aggressive approach and as an aggressive signal for those interested to take. It fulfills all of my aggressive entry criteria, so I have no reason not to take it. I have already gone in, selling right there, stop loss right there, so I'm going to keep this trade for next week. In the 4 hours time frame, I actually marked this area as the most obvious level of resistance. In the previous review, if you remember, we were talking about looking for short entries around here, and price was rejected off that level for that nice push to the downside. That push should continue. It should keep pushing to the downside. That is the more reason why I am going to keep this trade as well. All right, so the next one is the sterling pounds against the Canadian dollar. This is the 1 hour time frame. Well, it seems a bit of a mess. Some pushes to the upside here due to that Brexit statements on the sterling pounds. Okay, we had that heavy impact that pushed price for at least 2 days to the upside, but the Canadian dollar news announcement brought it back down, and as you can see, it's now sitting below the red line, below that red line, which is the daily level of resistance. So let's analyze our 1 hour levels of resistance, our 1 hour chart, drawing our levels of support and resistance. The most obvious here would be this high, and actually nothing else. We cannot draw all of these little levels. We can't draw that. Those are not significant. Intraweek levels of support and resistance, that's the only level that we can keep for now. Now moving to the weekly time frame. In the weekly time frame, you can see that heavy rejection candle right here. I am now anticipating a possible flat bottom triangle. That is what I am anticipating right now. Actually, I did a small trade here but closed it out. I did several small trades, but just closing them out because the entry criteria has not been fulfilled. I need all boxes, like I said, to be ticked before I can take any trade. For the sterling pounds against the Canadian dollar, this is a possible bounce point for price to come back down to the lower boundary of this possible flat bottom triangle. It is a possible flat bottom triangle, and if this level is confirmed, price is likely to come back down. Anyway, it's not confirmed yet. This is just the second bounce, so taking this, well, if you're an aggressive trader, it is quite risky since it is not confirmed. But at any rate, for this upcoming trading week on the sterling pounds against the Canadian dollar, we'll be concentrating on short opportunities. In the daily time frame, you can see how price has now given us a fake breakout of that previous level of resistance. That's a fake breakout, so that line can now be taken off. Our line of reference now in the daily time frame is this one here, this rising trend line. We'll be looking for a breakout, a pullback, continuation pattern to trade the trend collapse strategy if price is actually going to be pushing to the downside. That means you really do not want to trade against this rising trend line. You want price to break below that line before you search for your short opportunities. 4 hours time frame, we have this rising trend line as well. The 3 SMA trend filter is calling for an uptrend. Let's see how it looks like. Well, I'm afraid this might not play out. Okay, might not play out. The breakout, the pullback itself is just too much, so just keep this out. The 1 hour time frame, okay, the weekly line is already taking care of that, so no line here for now. That is it, nothing here. Let's wait for this daily line to be broken, but the directional bias from the weekly time frame, if that flat bottom triangle will hold true, looks more to the downside. The next one is the euro against the Canadian dollar. You already know about this. Let's move on straight to the weekly time frame. Price is on a flat top triangle. With that bounced here, this one, and you can see that rejection of that weekly level of resistance. This is the rising trend line for a flat top triangle. This bounce, this fake breakout here is absolutely valid. It is very, very valid. But as beautiful as it is, I am a bit scared and worried about taking this trade. Okay, why am I saying that? As you know, the flat top triangle is a hint that price might be pushing to the upside. Okay, that's one. Secondly, looking into the monthly time frame, remember that we got that retracement trend line broken, the breakout pullback and a possible continuation move. That means price has more potential to push to the upside. Well, it is a valid setup, so what we'll be doing here is to cut down on our risk. Instead of taking 2%, maybe we can just do 1% or let's say 1.5%. all right, it's a valid setup. Price is likely to push to the downside, and what we are actually going to be doing is to place our sell limit order somewhere there. We should place a sell limit order to see if price can make a little retracement before the push to the downside. On the whole, this is a valid fake breakout of that key level of resistance, so we might be seeing some fall to the downside before price can likely begin to bounce back up. Another reason is that the euro is quite a strong pair, so combining the euro and the Canadian dollar, both are becoming stronger. We might not risk much in this trade. We'll just risk a little percentage of our accounts to see how that goes. All right, in the daily time frame, anything here? Nothing really. Let's see the 4 hours time frame. In the 4 hours time frame, our rising trend line has now been broken. That is a plus. That is a good thing to see this line broken. So whatever trade we are taking is going to be on a highway free of traffic. So we'll be placing possibly a sell limit order somewhere here. As price makes that pullback, then we'll be triggered for even the trend collapse strategy. All right, instead of the euro against the Canadian dollar, I even prefer going short with the American dollar against the Canadian dollar. I prefer clicking on your straight button straight on the American dollar against the Canadian dollar. But anyway, let's see what's going to happen. I will get Hector advice on this setup. All right, the next one is the Australian dollar against the Japanese yen. Let's see the weekly time frame. Last week we talked about a possible breakout congestion continuation pattern here, but thank God we got Hector's advice and we avoided this trade because this level here does not belong to the weekly time frame. And as you can see, it's like price came to trigger all of those entries, then went back to hit out the stop losses. Fortunately, we're not involved in this trade. In the daily time frame, price has now made a nice retracement to that area of resistance that we are watching. It seems we are now ready to come back down. So with this candle right there, we'll be placing our sell stop order few pips below, our stop loss few pips above. All right, that will be our sell stop order, few pips below to our stop loss few pips above. It is a valid one. We will be taking that trade. For our time frame is a bit messed up. 1 hour time frame. So our order will be somewhere in here. By then, this rising trend line would have been broken. Okay. Australian dollar against the Japanese yen. Remember, I am already short in the American dollar against the Japanese yen, so I might not be taking both of them. I will be deciding which one to keep, but I still prefer the American dollar against the Japanese yen. On the whole, again, this directional bias for the Australian dollar against the Japanese yen for this upcoming trading week should be to the downside. All right, the next one is the New Zealand dollar against the American dollar. I just want to confirm my good friend's position, Raj, on this pair in the daily time frame. Raj already analyzed this pair and let us know there is a possible shoulder-head-shoulder pattern formation. Of course, I was keeping this channel, which of course signifies that price is likely to turn back up in this pair. The New Zealand dollar against the American dollar is going to see a severe movement to the upside. You need to be prepared for this. We have seen all of the hints. Price direction is heavily to the upside. There's going to be a much beautiful reversal on this pair, so please keep this in mind. Be prepared for this movement. Raj already analyzed, showing us that this is a slant shoulder-head-shoulder pattern formation. Okay, where this is the first shoulder, this is the head, this is the second shoulder. I totally agree with him. It is a possible shoulder-head-shoulder pattern formation, a very clear reversal sign. You have to take this into consideration. This is the neckline. This is the neckline. So what we want to see is, let me zoom in this chart. What we want to see is a solid breakout as price is breaking out of that neckline. We'll be looking in the forward time frame for a possible breakout, a pullback continuation pattern. As price makes the pullback, we'll be taking our long entries for price to possibly hit this area. This is the next target. I believe strongly in this setup. So this is a very good setup. Keep it on your radar. We need to wait for price to break above this key level of resistance. On the trend formation, the new trend is already giving us that hint. So this is it. This is the line you may want to keep. Most times you get a beautiful breakout. Price tend to make that pullback, excuse me, up to that zone before taking off. Okay, so let's keep this line. Let's keep this one as well. On the initial breakout, we'll be looking in the 4 hours time frame for a breakout pullback continuation move. So keep this pair very close to yourself. Price is likely to reverse, pushing to the upside. All right, let me mark your way to this. Okay, nothing else here. The intraday chart is quite a mix. Let's see the next pair and the last one. The euro against the American dollar. Quite a messed up chart in the 1 hour time frame. Plenty of hesitation. Sideways price bias. But there is something I am seeing in the weekly time frame. I just felt that hesitation, as you can see here, that's the representation of the 1 hour hesitation. For the whole of last week, that was what we got. That's the hesitation candle right here. This is a key level of key area that has been holding price. Let me actually put a line there. Okay, that's a key area that has been holding price as support here, resistance around that zone. We wouldn't want to see price coming too close below that area. We don't want to see that at all. We want price to remain above right here. Okay, for the euro against the American dollar, even if you place a buy stop order, few pips above that candle with your stop loss right here. This should be your buy stop order. I am sure you are going to be making money because I expect price to make a breakout very soon to the upside. If not a natural breakout, then the NFP might be helping price to make that push to the upside. We would not want to see price coming back down. Okay, only the NFP will be able to bring price back down. But as it is, everything here looks absolutely bullish on the euro against the American dollar. Last week we got only a congestion. Price is likely to push to the upside. In the daily time frame, that is what we have in here. This is the key area I was talking about. This area. Of course, for those of you who are also fans of the shoulder, head, shoulder pattern formation, you can see that we already have the breakout. This is the pullback, and now we are about seeing the continuation aspect of this pattern. So generally, the euro against the American dollar is technically bullish. It is still sitting above the 4-hour trend line, this rising trend line here. So with much of, we are only seeing those hesitation for last week. This week should give us a continuation move for price to push above the previous swing high. What can we possibly draw here? Well, let's connect these highs. Towards a possible channel. Take out this one. So this channel as well is a bullish hint that price might be breaking to the upside to make that push. So even if we are going to see a hesitation, anywhere here is the best place to go long again. Anytime price comes to this zone, this area, I will be clicking on my buy button. Anytime price comes here, I will be clicking on my buy button. All right, this is not the best place to click on your buy button. You want price to sit above that level. Once price is sitting above, then you should be looking for a continuation move. So that's basically all for this review. I am sure this upcoming trading week is going to be an interesting one, a more profitable one for us. Once again, thanks for being here. If you have questions or contributions, as usual, post them in the live chat window or in the Telegram group, and we'll be discussing everything there together. Thanks for watching. Talk to you before the London market opens on Monday. Do have a fantastic weekend. Bye bye.